VA, FHA, or conventional? Which mortgage is actually best for you? Well, the answer depends on your situation, but for most homeowners, veterans, and first responders that I work with, one of these is almost always the winner. Now, I'm John Nacarado, U.S. military veteran, retired law enforcement, and mortgage loan officer. Today, I'm going to be talking to you about how they actually compare, and I'm going to be breaking down the monthly payment, the down payment fees, and who each one is actually for. Let's start with the VA loan, because if you're eligible, this is actually your strongest option. Zero down payment, no mortgage insurance, like ever, and the interest rates are typically lower than conventional, and the VA funding fee that you kind of have to pay for, that can be financed into the loan, so you're not coming out of pocket for it. So what's the catch on a VA loan? Well, you actually need to be a veteran, active duty, or qualifying surviving spouse. Now, on VA loans, there's something called a funding fee, which we talked about a little earlier, and that's when the veterans have to pay this up front. It's a fee, it's a small percentage. However, you may not know this. If you have a service-oriented disability or active duty and award of the Purple Heart, or you're a surviving spouse and receiving what's called dependency indemnity compensation, that fee is waived entirely, so no funding fee. All right, just a couple little tips and tricks in there. So for most veterans like myself, the VA loan beats everything else on paper. Now the FHA loan. This is a government-backed loan too, but it's not just for veterans, and anyone can apply. Minimum down payment, 3.5%. Credit requirements are flexible. You can go as low as 580. But here's the big difference between the FHA loans. They have what's called a mortgage insurance premium that you have to pay upfront and monthly. And unlike conventional loans or private mortgage insurance, FHA mortgage insurance typically stays for the entire life of the loan. So the monthly payment on an FHA loan is always higher than the VA loan, typically. Pretty much for the same house. And if you're eligible for a VA, FHA is rarely the better play. So VA wins for veterans. FHA is an option for anyone else. So now let's talk about conventional and when it shines and when it doesn't. Conventional loans, these are loans that typically follow Fannie Mae and Freddie Mac guidelines with no government backing. Big advantage is if you put 20% down, there's no private mortgage insurance. Interest rates can be very comparable, and if you have an excellent credit rating, unlike the VA and FHA loans, there aren't any upfront government funding fees. Now the downside, conventional loans generally have stricter credit requirements. Most lenders require at least a 620 credit score, with the best pricing usually going to borrowers around 700 or higher. Now many first-time home buyers can qualify with as little as 3% down, but typically you need 20% down to avoid PMI. For a first responder or veteran with excellent credit, solid down payment, conventional loan can absolutely make sense. But for many of my clients, a VA loan still provides the lower monthly payment. Quick pause. Which loan type are you leaning towards? VA, FHA, or conventional? Drop it in the comments and let's finish this comparison. Now let's say you're buying a $300,000 home. Using some sample rates, a VA loan, let's say at 6.25% with zero down and the funding fee financed, you could have a payment of around $2,000 per month. An FHA loan at 6.5%, let's say with 3.5% down, and monthly mortgage insurance could be closer to $2,300. A conventional loan at 6.75, let's say, with 5% down and PMI might come in around $2,200. That's roughly $200 to $300 a month difference. Now over 5 years, that's $12,000 to $18,000 that stays in your pocket. And that's before you even looking at any closing costs. Now VA loans also allow sellers to pay many of the buyer's closing costs and certain VA specific fees, which can significantly reduce the amount of cash you need to bring to the closing table. So here's the bottom line. If you're eligible for a VA loan, it's often the best option. You can get zero down, no monthly mortgage insurance, and some of the strongest borrower protections available. FHA is a great option if you don't qualify for VA and you need more flexibility with your credit or down payment. Conventional loans can be better if you have excellent credit, larger down payment, or you want to avoid some of the fees that come with the government-backed loans. If you want to see which option actually saves you the most money, Click the link in the description. We'll compare VA, FHA, and conventional side by side, and I'll show you exactly what your payment and cash to close would look like. Thanks for watching, and I look forward to helping you with your home financing needs. Have a great day.